Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Hey, greetings and welcome to Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, joined by Hans Albrecht, our options educator, mentor, trader extraordinaire. He is very active in not only educating through courses and mentorship. You can find him at LaDucTrading.com/Hans, also working with our members in our Slack membership space, as well as posting his trades. So we come together and kind of look at the market. I try to size it up from a macro standpoint. I have this kind of collective trade mindset of dollar yields, oil, and then how it impacts volatility and equities. So we'll kind of recap some of what's going on right now in the world, not just tariffs, but the reaction thereof and money rotating. All right, so then we kind of get into options tactics around particular plays. We can also answer questions. So hit us up in Zoom Q&A if you have any questions, macro to micro and option structure. We'll give it our best shot. We have a bunch of stuff going on as it relates to oil. Has definitely started to roll over. That is part and parcel of what the administration wants, but it may not be what oil companies want. That's a big focus that I have been on for the past few weeks because I sensed that we were going to have a pull down. The big level for me is this 65. I can give it in crude. I can give a little bit more details on that, but the gist of it is if we start breaking below those levels, we'll get another deflation impulse. In the meantime, yields definitely came back down, the 10-year in particular, into a 4.2 area. It actually overshot and then ricochet rabbit yesterday on a little bit more of, this is a tougher one, meaning the tariffs were implemented on Tuesday, and then LaDuc was out saying maybe we'll repeal or revoke whatever, some of them, but it was really geared toward the auto industry, which would be hardest hit U.S. auto manufacturers. So long story short, it was not all. But we also have a situation where yields are spiking abroad. So we have this amazing downdraft in the past 3 days, especially with the dollar, the US dollar. So relatively speaking, the euro dollar and the pound dollar pair trades have been spiking very aggressively on stimulus. So over there, they're going to kind of have to go it alone. Trump wants to pull out of NATO, although that takes 2/3 approval of Congress. This is not just a directive that he can do, but he can pull troops out and he can pull money out. So it is a de facto withdrawal. But Europe is not going to take that line down. They could, but they don't want to. So they have basically rallied around Ukraine and basically committed arms, soldiers, money, and let the conflict continue. And the result is they have to fund it. So they have basically issued this promise of debt, and this has spiked their yields. Long story short, money flows, path of least resistance, where they can get the most yield. US dollar has been falling with yields, with equities, with oil. So money has been rotating abroad, not just in the China space, because they're also doing stimulus, a little bit different, not the same fiscal stimulus, but they are absolutely trying to increase their banks, their citizens' confidence, and their stock market and capital markets, I should say. So China's really doing stealth and direct stimulus. Europe is now doing, Germany taking the lead in direct fiscal and monetary stimulus continued. So their yields are higher and money, that dollar, is dropping like a rock as money is flowing elsewhere. So usually we get a little bit of a tailwind here with dollar down and equities popping, but this is a little bit different. It's actually our 10-year. So as our 10-year has bounced yesterday and today, that's actually that kind of inflationary thrust for assets. Stocks like it. It's short term. I don't think it's going to last, but that's exactly why bonds pulled back, yields took a little bounce, bringing equities higher. And this is really, unfortunately, I don't think going to be long lasting, but that's the market we're in. We've got some oil, support right now that needs to hold. We've got some yield support, that 4.2, the 10-year US, that needs to hold. And we have the dollar around 104.5, 105, which doesn't really need to hold because the administration really does want it to fall. But I can see a situation where as we go into FOMC in a week, 2 weeks from today, and we'll be live for that, and as we go into potential government shutdown on the 14th, we could get some support in the dollar. But for right now, These are some sharp moves in the FX complex that have basically taken our worry right now, short term, from VIX spiking. And that's what I want to turn over to you. We're going to have a conversation about volatility because I don't think it's done.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.